is Darragh Kelly. I've got the honor of being the moderator on the session today. I'm partner at Open Cloud Factory, which is a cybersecurity firm here in the Basque Country. I'm Irish, although 23 years in the Basque Country. Like the company, we're very much invested in the region. We're very much invested in growing a strong EU cybersecurity ecosystem. And for me, in that context, I'd like to thank ESCO and the Basque Cybersecurity Centre for depositing their trust in me to moderate this session, and also for getting this amazing panel together. Thank you very much. So these guys have been great in preparation for the session. So what I'll do is I'll just give a quick introduction, and then we'll get started. Okay. So Carlos Moreira da Silva. Carlos has been focused on investment in cybersecurity when he was at Sonai Investment Management. They started with initial investments in cybersecurity. Then they saw that if they really wanted to get involved in this, they had to get a deeper understanding. So he's been at that for the last 10 years. Last year, I think it came to fruition that you had a very long and successful journey with S21 Sec and Exilium in the exit with Thales. So Carlos is a very specialized VC, and last year he founded 33N Ventures. So they've just set up that fund. I think you've got one investment so far. So it's a fund that's focused on European startups and also startups in Israel. So very, very interesting to get his point of view on how that how that VC has been started up. So that's Carlos. So welcome, Carlos. Naiara. Naiara is an angel investor. She's an advisor, and she's an executive on strategy and operations. Naiara brings a really interesting perspective on security because she's got a vision of it from a vendor's perspective, having sort of prepared services for a vendor where she was at, and also from an end user's perspective, having matured a security program from scratch to bringing that to ISO 27001 maturity, which is an amazing feat. So she has that really interesting point of view. In addition to the fact she's American. Well, you're American when you're in the Basque Country, and you're Basque when you're in America. Is that correct?
That's right. That's
okay,
right.
So she brings a very interesting perspective on the US-EU market, and I think that's going to be very enriching in today's conversation. So welcome, Naiara. Michael Hochholzer, close enough. My apologies. Michael has been in investment for over 20 years. He's the managing partner at GD Investments. It's very interesting, a team-based VC. Okay, they're focused on trust tech. So it's all about securing and restoring trust in digital and society. So very interesting VC. Last year, Michael co-invested 50 million with the European Investment Bank, specifically for trust tech. So it'll be very interesting to see how that experience went in that sort of public-private collaboration. So very welcome, Michael. And finally, Juan Revuelta. Juan is a VC. He's extensive expertise in technology and previous experience in capital markets as an equity research analyst and as an engineer also in high-tech corporations. He's partner at Swanlaab. It's a Spanish VC. Juan's focus is primarily on investments in local companies at a Spanish level. He's got a very interesting perspective on that's their focus, that's what they do, and they don't move outside of that. He has done some investments in cybersecurity, and from our conversations is interested in doing more. So welcome everybody on the panel.
Thank you.
Okay, so just to frame the debate that we're going to have, first of all, I would say take the gloves off. Okay, so anything that comes to mind, let's share it with the audience. So just to frame our conversation today, I think from a European cybersecurity market, you know, we're at a very exceptional moment in time. Okay, so Axel, the CISO or the ECSO chairman mentioned at the start this huge gap that exists between the financial cost of cybercrime and that is 10 times bigger than the actual value of the cybersecurity market. And within that context, the European Union is really lagging in regards to investment compared with the US. So, you know, I think there's sort of half of what the US is spending per GDP. And also the EU, it's a net cyber importer. Okay, so that's the reality that we're dealing with. And then to that, we also have a geopolitical situation at the moment with the conflict in Russia over 12 years ago. And I think that's really just accelerated certain, you know, the reduction of dependencies on other regions from a technological standpoint. So I think companies are starting to question their security stack, and also at a tactical level, you know, the impact of that crisis is having on certain countries as well. From Russia, these attacks are just increasing 250%. So there's a strategical impact here, and there's also a tactical impact. And we're seeing a big sort of uptake on, you know, made in Europe, these initiatives, or the European seal that we talked about today. So, you know, that's sort of where we're at. We have a $2 billion investment gap that we need to close. So, you know, without even taking into consideration AI and quantum computing, you know, that's really going to stress test absolutely everything. You know, but that's, you know, the situation where we're at the moment is extremely exceptional. Okay, in this move sort of towards data sovereignty. So I know it's a big frame of information, but Carlos, you know, do you feel that this last year has been an exceptional time? I start with you, Carlos, because, you know, you started up at 33N Ventures, and it sort of has coincided in this moment. So what are your thoughts? Have you seen anything specific, any huge shifts in the last year?
First of all, good afternoon to everyone, and thank you for the invitation. Effectively, there were some changes and sparks, right? Let's try to grab the sparks and not be burned with the sparks, first of all, right? Because on one side, as you commented, the awareness has increased, not only on the public side, but also on the private side. And actually, spending has increased already last year significantly, or more than it used to be. And we saw that clearly on the service side. Tech is also following. On the public side, everyone now is talking about defense and how to include more in an intensive way cybersecurity on the defense side. But the regulation will also be probably taken care with much more attention. And that will keep driving the demand in Europe. And anyhow, if we don't do anything, we will be forced in one way or the other. So, being it the good way or the bad way, we will need to catch up, because Europe is a relevant market, more than 20% of the global market, but it's still spending roughly half of the US when we weight that per GDP. So then the question is, are we doing things in the right way, or how can we take advantage of the growth that is forecast, right? And sometimes we see a lot of companies trying to do the same as others in the US or Israel are already taking to the market, probably 5 years later. And as we see it, Europe has a huge opportunity right now because there are a lot of things that are changing on the tech stack, and that represents an opportunity for winning the new age of cybersecurity solutions development. And we are talking about the shift to the cloud, but the application development, not sure if everyone has present, but Europe has actually more developers than the US. Then going up on the stack, we are talking about data, and on data, we started to be worried about data protection already a few years ago. Now we need to understand how that will play also in the new infrastructure. And then machine learning, and there are already some governments, for instance, concerned about data poisoning on the machine learning and AI feeds. So we have a very good opportunity taking advantage of the market growth. Of course, there's also an economic slowdown out there, and also bringing some constraints, and we can be talking about the concentration of vendors. Probably buyers will be a bit more focused on the solutions that they will pick up. But there's also an opportunity, because startups probably may do things in a slightly different way to try. So the playing field is changing, and when it happens, it represents new opportunities. So in a summary, I think that cybersecurity is becoming even more strategic for Europe, and we are in a good position to try to take advantage of it, especially when companies in Europe are typically more efficient on bringing good technology to the market, not then talking about scaling it up internationally. But there's good technology in the market. There's plenty of opportunities still to follow.
Okay, so cybersecurity is becoming more strategic. Juan, you set up a new fund just recently as well.
Yep.
You're looking to 15 to 18 investments, I believe.
Yep.
How do you see that? You know, the EU being more strategically focused on cybersecurity, is that affecting what you are doing with the new fund?
Well, the reality of the situation right now, the new fund of Swanlaab is going to focus in software enterprise companies and B2B business models. And I was reading just this morning in the plane that the spending of corporates in SaaS products has decreased a little bit in 2022. But if you take a close look into the different verticals, it has affected a lot HR, it has affected a lot SaaS product, focus on product or in analytics, but for instance, IT and security spending has increased dramatically, almost 60% of growth of the corporates devoting money into SaaS products. So security is still on the rise, and definitely for us it's going to take a huge impact in the new fund, hopefully. The thing here, I think we need to understand the complication of the situation that we are living right now. But this situation, for us as investors in venture capital, it's a huge opportunity, right? Right now, when you have tensions with the Ukrainian, the inflation levels becoming really high. The reality of what you have seen is that the price of the different assets in general of startups has decreased substantially. That's an opportunity for new investors, but also because of the huge, massive firings that all the corporations in technology have suffered recently. You see many of these people going into and start creating their own endeavors in technology, in cybersecurity, and so it's a huge opportunity, because usually in this type of times, of tough times and uncertainty, you usually see this is when you have the most quantity of people, going out and start creating their own startups, and also the quality, because you don't have any other choice. So either you stay there and you start selling, or you die. So basically, in the end, the companies, those startups, become more efficient, and you usually tend to see in these vintages, you tend to see the best opportunities for venture capital investors.
Okay, so you see a lot of opportunity. Michael, at G&D, for trust tech companies? You know, did you share the view that cyber is becoming more strategic and it's a moment of opportunity?
I think in order to drive more dominant companies, important companies coming out of Europe, we need more companies founded more or less, like a sales funnel. The more we have in, not everyone will make it. I think that's obvious and straightforward. But in order to really grow and be more important in this market, we need more feet, so to speak. And we think a bit broader than cyber. So I wouldn't dare to put a fund purely on cyber, I guess, in Europe or part of Europe. That's why we think in trust tech, which being broader, including many other things. And just looking at the data, did some homework on investment, for example, in risk and compliance companies. I think thanks partially to regulation that happened in Europe, also there was a decrease from 21 to 22 in the investments, but not that steep compared to, okay, so my ear is not fitting, sorry for that. There's not that steep decrease if you look at, for example, risk and compliance. So if you look at the overall area more or less, I think that's pretty important. And the other aspect, so I think Germany was not spearheading starting companies for quite some time. So thinking about my early venture capital days, but now I think it's really starting from university, many programs, but also through the corporates. We see, and Axel will agree, that he sees some important guys leaving from established corporates going to startup companies in order to be a part of really starting a new endeavor and becoming an important role there.
Have an impact.
Yeah.
Yeah. Okay, interesting. Naiara, anything that you'd like to add from your advisory roles that you're doing at the moment?
What I would add is that when there is economic downturn from the business perspective, generally companies actually face more threats because there's more need. So when there are solutions like we've seen today that potentially could reduce the need of hands in the information security group, I think will continue to be welcomed. And often these solutions are driven by these employees who might leave larger corporations because they see a need for something that would have eased their work in their previous roles. So I think there's still opportunity for those types of solutions that reduce the need for the information security professionals that are already lacking, and improve the protection of the companies with lower cost.
Okay, excellent. Okay, so just to sort of focus on uncertain times, you know, it's in the news, it's everywhere you go, especially within the tech sector, the cutbacks, down rounds, you know, these are all the points that are getting everybody's attention at the moment. You know, so what is your views as VCs to start, and then Naiara as well? I think you started on the point, Juan.
Yeah, I just wanted to complement the idea is that even though it's an opportunity for venture, actually, if you take a look on the past years and you do a benchmark on what has happened, usually you tend to see that the vintages of crisis times are usually the best in venture capital. So for us, it's opening a time of opportunity right now. But having said that, the reality is when you go out there, you have fundraised this year, I have been fundraising this year, it's complicated because still money becomes skeptical. And even you start telling the owners of the capital, the funds, the family offices, you start telling them that it's an opportunity, but still there are many other problems and many other complications and uncertainties that you need to take care of. And the reality is that the opportunity is there, but the uncertainty is real, it's there, and it affects everybody. That's what's pushing the prices of the assets down, basically, because it's the fundraising problem affects everybody. It's not only affecting ourselves, the funds, but also since we are not fundraising with that much agility, then that ends up with the startups. So the startups, they have more difficult times also to fundraise, and it becomes a huge snowball, right? So it's a complicated time, but I will never forget to think that the opportunity is there right now, and when somebody or an organization or a company has money, right now it's a much more attractive time to put it into movement and to start investing, and definitely cybersecurity is one of the most attractive assets right now.
And Naiara, sort of, not to use you as the comparative between the US and Europe, but in times of difficulty, in times of stress, do you see a different reaction from US investment companies or US companies in general?
I mean, it is well known, I don't have the research for this, but in the US that people generally become rich in these situations, right? So when the money is there and you're willing to take the risk, generally the companies that will make it through this phase, if they can make it through this phase, it means that they truly have a solution to a problem that exists, which means that once they come out of this situation, they will sell for much, much more. So I think there's still hope for that money and also for the companies that are here to not dwell too much in the valuations during this term, because in the end, higher valuations also make it more difficult for the next round. So focus on continuing to solve the problem that you are solving, taking just as much money as you really truly need during this phase, because that will better position you in the next round, having had gone through this stage with as little money as possible and having continued to solve problems for your clients.
Okay, Carlos, I see you agreeing with that.
Yeah, totally agree. I think we are getting back to the really old questions when we evaluated to put money on startups, right? Because during the last years, I think some of us decided just to skip some of the fundamental questions. And one thing is certain, so cybersecurity is a fundamental need, and it will be for a long time, as the tech landscape is always changing. The big players incorporate innovation through acquisitions, so there will be the need for new startups in the market anyhow. Now we need to understand and to be critical on to what the money will be used, and it's good. It's good because we make growth more efficient. We put in value the specialization that some investors have compared with others, because it's a very complex ecosystem. So you have like 3,000 startups just in cybersecurity. So it's not easy to navigate.
Sure.
And so I think it's very much welcome, this correction. We also need to understand not only what's happening in the stages where we invest, but what's happening in the later stages on the IPO paths, with the strategic acquirers, so what they will value and adapt as investors and as entrepreneurs.
Okay. Michael, the skepticism is sort of correcting the market?
Yeah, I'm a bit disillusionated, let's put it like this. So, on the one hand side, there's this market downturn, there's this doom messages, oh, tomorrow lights are out and startups better buckle up for the next 3 years and will not do any kind of investment, blah, blah, blah. I'm more the optimist there. So we did some homework and looked at what happened in investments after bubble bursting internet 2000, after Lehman, after COVID 2020. I thought, oh, wonderful. Get some of the really great companies and get in at a reasonable valuation. And guess what? Good companies still get funded and the investors have money. And they, of course, defend the valuation. And in this analysis, what we saw is, yes, there was like a downturn. It was like 2 quarters, 3 quarters, but then going up and not leveling to the nice level we had hoped, I guess, but again, increasing a bit. And honestly, in cyber, sometimes we have crazy valuations. So where I think if either betting on the really big bang more or less, but if you look at the average exit, especially in Europe, then how to make money on that. And this doesn't help neither the startup companies nor the investors. So I think I'm not sure this leveling out and keeping at the same level will persist. Then there's this herd effect of us as investors. If there's good companies, we want to be in there. And of course, it's market conditions then. So multiple interested parties will drive the price.
Okay.
So good news for all good companies out there.
Yeah.
Actually, let me just complement what you have just said. I'm seeing differences with previous crises we had. For instance, the Lehman you mentioned. That I remember it was a disaster because literally the money just disappeared. So there was not money to fund anything. Right now, there is still money out there, but the money has become more focused into the good projects. When you have a truly good projects and you have metrics and you can show that metrics, then they are all funding their way and they are all getting funded eventually. So right now, times are difficult, but still there is life and people still gets growing and deal flow appearing. So things are not that bad.
I guess the good corrective effect was in the really later stage.
Exactly.
Sometimes very crazy valuations. They came down to a normal more or less. Let's look at fintech. Easy to spot these more or less. But the negative thing, really, in order to what I mentioned before, start creating companies and getting more choices for the market, so to speak. I really see early stage drying out a bit. So people shift more to let's see more proof, more or less.
Right.
Not sure how you see this, but that's what I'm a bit sorry about, or a bit. I think if you don't start the pipeline and help good companies create and finance the first stages, and if the early stage investors dry out, or we talked in the break about this, very local systems, for example. Of course, you need to help a lot to the companies, give them a helping hand, discuss and consult. You don't do this over a couple of thousand miles. But I guess this early stage ecosystem. I'm sorry, and I hope this will again renormalize a bit, taking more risk. So perhaps also to us as the investors, take a bit more risk at reasonable valuations.
Ultimately, there was an event I went to not long ago, and it seemed like there was more VCs. Sorry, you guys might not like this comment, but it seemed like there were more VCs looking for good projects than good projects looking for VCs. It seemed like really the scavengers almost were the VCs truly trying to analyze and understand which ones are the projects were good. So the money's still there because the VCs are already funded, right? So you still have to invest because you have a period of time where you need to exit. So there's still hope.
But just with that logic, this sort of evening out, and it's going to be there. Good companies are going to find the money, if you have a clear business model set up. But would that sort of be more, is that going to affect more the early stages, as Mikhail says, that haven't proven their business model? Are they going to be the companies that are going to be more impacted in this correction, or not?
Look, I'm not sure, but I'm not so exposed to the early stage, right? But what I'm seeing now is that at least investors in more a bit later, so not so much, but we typically invest after 1 million ARR. They are looking for efficiency to reach that 1 million ARR, right? While investors on the earlier stage, they are looking, if the company really has a good team, a good idea, or addressing a relevant opportunity, and so on. And that didn't change a lot, right? So, of course, they need to be sharp in identifying the opportunity, in having a good team, and so on. Then, if they are finding their way in the market, if they are making revenues or not, that's then the challenge for the next Series A, Series B, right? And again, on that, I think Europe has a huge opportunity because our companies burn way less than companies in the US or in Israel to reach to the same stage. Then, what we need is to find a way to support them in scaling further in an efficient way. I also don't think the market is closed in any of the stages, right? I think we all are open to do investments. Now, we are being much more strict in the way that we evaluate those investments, but far from being closed, right?
Okay, so uncertain times, opportunities, where could Europe focus? From a product perspective, you know, I always think of, you know, what's your core competence? You know, contrast that with your competition and market needs to position yourself. So, you know, what could Europe focus on? You know, where are the strengths that Europe could double down? You know, maybe Naiara?
So, you know, from the solution or business perspective, I think, you know, Europe was pioneer in privacy, right? GDPR was sort of here. The US, when we were trying to, you know, strengthen our platforms, and what was this, 2018, 19, we were looking at Europe for privacy and how GDPR was going to affect us. You know, now California, I would say, is close behind, and maybe in the US, a lot of the states might be looking at California, but ultimately there's, you know, the highest common denominator is Europe, and then within Europe, the different states that have different requirements and the flexibility that you need to have as a service provider in Europe, because Europe is just not one country, right? And we have different needs and different regulations and different, so you know, if you're thinking about going back to the US, being well positioned in Europe in that stage and proving that you have solved the problem where the problem was first, I guess, introduced in the situation, right? Is going to get you very far away in the US as well. And the second piece I would say, going back to what Pablo said, is that opportunity of having truly often a stronger product, right? Because even if the investment might be less in cybersecurity in Europe, there are truly more engineers, right? And that was so clear to me when I first moved here. The issue is that we're not positioning ourselves, speaking in Europe, or at least, you know, the Basque Country and Spain, which I know better than the rest of Europe, not positioning ourselves as, you know, the leaders on whatever we are doing, right? I think the investment, and early on, the first, you know, before the million in the US is often much more in marketing and sales, and potentially when you actually come to implement the product, where you're lagging. So if you're going head to head with a solution in the US, they've probably positioned themselves better, they've probably sold the idea better, but you're probably stronger in the engineering perspective. And I'm seeing heads nodding, but that also means you need to ramp up on how to position yourselves, and, you know, don't only focus head down on improving the solution, which obviously it's extremely important, because when you actually get a client, you need to prove what you're doing. But generally, you've already earned the trust, and you have some time as well. And I'm talking very early on here, right? So understanding that you are likely stronger than your head-to-head competitor in the US, because they're just better at positioning. So you either, you know, invest in marketing and positioning and the message that you're bringing to the market, or just be confident on the solution, because you're probably going to be more advanced there.
Can I add something? Because so on one thing, I think that we agree. So we can get very good technology in Europe, right? Then we have the problem of trying to scale these companies to a decent size in ARR very quickly in Europe, and we have a structural problem, because most of the funds that are supporting these companies in this stage are mostly local.
They're mostly
right? Local. And so we are not leveraging even before speaking about going to the US, we are not leveraging the European scale. Right? And even the incentives we see in the market by those that very frequently serve as anchor investors, they typically favor the appearance of very local funds. When startups probably need to start taking advantage of the full European market a bit earlier, right? So we have a challenge there, and there's something that the public institutions can do about it. So just being a bit provocative here, but I think that's something we can help with.
Well, I think it's a nice segue just into...
Yeah, I was going to say, but
follow up, Naiara.
But I think it's part of the next question as well.
Yeah,
I would say there's also a level of danger there, right? It needs to be well, the first thing that amazed me here is the support of the government organizations in that very, very early stage. And it's amazing, and it still is. I think that the companies need to be very careful of pursuing that money for the right reason, and ensuring that the market problem is still being solved with however you're going to invest that money, and not just taking that money just for the sake of taking money, because it will make you waste time, which is so important in that first stage.
Right. There's the cost of opportunity lost, right?
Exactly.
Yeah. So in regards to, public-private collaboration, the EU, potentially we've got an advantage over the US there. Michael, G&D created the 50 million co-fund with the European Investment Bank in 2021. So just to get your thoughts on, how did that come to fruition? And since that has been launched, what lessons have been learned?
Actually, it was last year, and going back to Carlos' presentation before, so the one logo there, ID Now, it's one of our portfolio companies. That's how we met, more or less, and learned that there's an opportunity that the EIB will, or has the potential to set up a co-investment scheme, for example, with a corporate, which we are lucky to convince the EIB and get this up and rolling. I think from the intellectual part, there's a very clear scene that there is this gap, and to foster especially what we call trust tech, cybersecurity plus regulatory compliance and these technologies, as well as sustainability, because I think the focus here in Europe is pretty strong on that. And from my perspective, so the EIB as organization, they put money in this context for us to really start with startup companies. And Carlos mentioned for later stage there is this venture loan, which is pretty attractive to my view for companies as well as investors at a certain size. So I think definitely there is a strong will to act in these areas. I guess the little unfair advantage for the US is it's a more homogeneous market, so it's one language. The culture is pretty similar. You could argue about Texas versus whatever, but we can't even argue in Germany about North and South. And we have in EU 27 countries with many different cultures, and to make the companies first prove in the home zone, so to speak, it's just more difficult, more or less. So I guess I see a lot of signs. It takes a bit of time. Good question, I think, also for a panel tomorrow is how to harmonize more or less in this area, and to European thinking foster also European companies to get the chance to grow. I think that's an interesting piece.
Okay, so from that sort of pan-European perspective that Carlos is talking about, I'd love to get your point of view. Juan, porque yours is, it's a local, so we'll get a contrast of ideas. But there's this pan-European opportunity, Carlos, that you've talked about, and there's the ESCO initiative, which is the European cybersecurity investment platform, something that they brought to the EU Commission maybe 3 or 4 years ago with public-private collaboration. I think it was 40 or 50 stakeholders involved. There was a study published just last year, for people that are not aware of it, And it's about basically establishing an investment instrument with a pan-European vision, and it will sort of have a crowd sort of funding sort of view, and it's more focused on the later stages. So it would have that view of pan-European. It's not local. So Carlos, I know 33N Ventures, you endorsed that, or you were part of that. So just to get your thoughts on that.
Of course. Just a bit of probably background on how that came to the discussion, right? Because we have an idea that Europe is lagging regarding other regions in terms of investment. And then the gap can be 1 billion, 2, or eventually much more than that. But not falling on the discussion regarding the gap of funding, one thing is certain. So Europe as a spending market in cybersecurity that represents a bit more than 20%. And we just are investing 10% of the global investment in cybersecurity. Then if we look a little bit further in terms of how many unicorns do we have in the space, it's like 6%, okay? So when we want to reinforce the ecosystem, we can't just look at the early stage, but we need to think about the full ecosystem. What are we investing to, right? And so it's not just a question of putting more money in the early stage, but also reinforcing the companies that will become unicorns, consolidators, and so on. And so, and for fostering that, in our perspective, in the discussion of the group, there is the need for significant capital that allows us to pick companies in the early stage and play in the same field as American investors. What we cannot do is to expect to create a global winner having tickets that are half of our counterparts from other regions. And so we need to have bigger funds that can address the multiple stages here in Europe, right? And for having those funds, we need to be talking about tickets of a magnitude that is totally different from what we have now. And what we have been asking public institutions is to step up and to help to create these funds with a fund of funds facility that could help foster the creation of such funds. So the study has been made. I think it's recognized now by everyone that is a significant gap. And what is being in the discussion is what is the instrument that can be used now to act on closing the gap. One of my concerns and the discussion that we have been having also in the group is that sometimes we end up in very protective measures. Okay, we will invest, but then these companies, they need to stay in Europe. The next rounds need to be done by European investors. And I don't have anything against it. But eventually, founders of a good company will try to get those investors or the diversity of investors that will support them in the best way, getting bigger and getting international. And so eventually we will not be in a good competitive position to compete also with those funds. So in our perspective, we should be much more open to foster the cybersecurity European ecosystem, either by supporting companies that eventually will go to other regions. Some of them, of course, will be sold to players from other regions, but those founders will come to Europe and will found other companies. And some of those companies eventually will stay in Europe and will become consolidators. Now, if we restrict a lot the use of those funds, then we may have a huge problem.
Okay, interesting. Juan, you've a sort of an interesting take on, not on the pan-European, your focus is very much on Spain. So if you could talk a little bit, why, or do you see yourself fitting into that potential instrument, or?
Yeah, actually, many of the ideas that are being said, they apply even stronger in countries such as Spain, because Spain, even though we are growing right now, luckily at a very high pace, but still we are, with certain metrics, if compared with other countries in Europe, we are far behind from them. So, with respect to collaboration between public and private, in terms of investing in the startup ecosystem, basically it's critical to have it in place. They had it in the US in the 70s, they had it in Israel in the 90s, they still have. So in order to create an ecosystem of investment, the support in terms of money, not only, but in terms of money as well, of the public institutions is critical, okay? This is one of the instruments that make the private investors to start losing fear, and they start becoming, more active in the ecosystem. And once we pass this time, this uncertainty in time, then the need of this public money, it will be less and less necessary, let's say, for the ecosystem. But at the beginning, it's critical. And this instrument that Carlos has been talking about in Spain is critical, as much as the EIF efforts or the Fondico the Fondico platform we have in Spain, or CDTI efforts as well. So different public instruments to support the investments in funds that eventually will end up in the startups are definitely critical. Hopefully in the future, once the private ecosystem is strong enough to do it by itself, then the public money will be less needed.
Less needed.
Exactly, but at the beginning it's critical.
And I would say also very critical to bring talent back. Because, when I was kind of coming back a year and a half ago I guess, the comments are, you're in technology, why would you leave the Mecca, right? Well, if there is funding here, if there are companies here, if there is that movement, growth, we will also get a lot of the talent back, which we will need.
And it's starting, I guess.
Yeah.
That's what I see more and more, that people have been working in the States for big data, for example, whatever, for 10 years. And they're Europeans at heart at some point in time and want to get back and want to bring their family back to Europe and also act in Europe more or less. That's good because they've been trained, I guess, sales, marketing, that's definitely the advantage of American startups compared to real solid tech, just color it black and white. But coming back, having the experience, having seen different other cultures to build companies, that's super important, I guess.
Yeah, I think talent was something that we talked about sort of in the preparation for the session. Will the pool of European skills, will that be enough? Or is there enough qualified people for what we need? It's strategic. We know we're starting to get the pieces in place. How are we doing in talent from what you guys are seeing? Anybody wants to?
From my perspective, we have talent enough at a much cheaper cost than other countries that we are competing with, like the US or Israel. So the cost opportunity here is amazing, especially in southern countries of Europe. And we are not having less talent. We are just simply having a less developed ecosystem. And this is something we need to train. But when you have many of those engineers not working for startups, but working for corporates, the level of high-tech knowledge they have is amazing. So I wouldn't talk about that we are having less capacity or less talent. I would say we are just maturing the ecosystem, and we need to be pushing that.
And I think as the risk or adversity of individuals lessens, as they see there's investment in those startups, that it's not as risky to leave your big, elephant to go to work to a startup, we'll see that shift as well, and we'll get much more infusion into those smaller companies.
Excellent. Okay, so just
we're going to be finishing, Darragh. I'm so sorry.
And we have 10 minutes or no?
No.
No, we're on time. I thought we...
Maybe one or two.
It's been at 0-0 from the start.
To say goodbye, if it's okay, one or two to say goodbye. Very quickly, some conclusions.
Some conclusions. I think, you know, cybersecurity is strategic. If anybody would like to summarize their thoughts, I thought we could have a few minutes for each of us to go around. But any thoughts to share?
Look, I think there is no doubt that cybersecurity is strategic for Europe, and is strategic for the companies that Europe has across the several verticals. Every company is going more digital. If those companies don't have concern about cybersecurity, probably they will struggle in their new digital business model, right? So it will become, for sure, even more strategic. We are not in a good position, but we can take advantage still of the position where we are to still correct things. And I hope we can, as a community, we can bring the several pieces in order to address the opportunity and not then go after the debt that we may generate around.
Excellent, thank you, Carlos. I think we've talked about a lot of pieces that I think are coming together. The European investment platform. We've talked about a correction in the market, which is probably a healthy thing. Good companies are going to come out of this well. So I think the overall message is a lot more positive from this panel than possibly what we're listening to out there. So nothing more than to thank this absolutely amazing panel. So if we can have a round of applause, please. Thank you.